it is a Tuesday, so let's go over to TFNN.com. Check out Newsletters tab. Right here, you have the opening call newsletter by Basil Chapman, and I have just been enthralled with Basil's picks recently. I think I just like the way he looks at stuff, to be honest with you. This is a fantastic newsletter. Of course, you get a fantastic weekly update on Fridays as well, on top of daily update every day the market is open. And of course, you have this massive value added where you have the 90-minute live webinars that he does for subscribers only. So you got to check it out. Basil, how are you doing?
I'm doing well. Jacob, how are you doing?
Doing well. Just kind of taking this market in. A lot of volatility, especially today, huh?
Yes. So this is very interesting because let me just show this chart, and then we can talk about Chapman methodology.
Yeah.
So I look at three key patterns. I look at a lot of other things. I got a huge Sears and Roebuck toolbox for different techniques, but this is very important. Straight up, straight down, cup formation, arch formation, mix of 1 or 2 or 1 and 3. In this case, I'm looking at the H pattern.
Okay.
And what happens very often, there's a sharp pullback, and then there's a rally. And as it rolls over, you've got to monitor carefully. And it usually rolls over before a peak D. And so if it does that, it's usually about the third or fourth bar after the arch is turned down, where the tidal wave either kicks in, or that's where you're going to find support. So right. Where are we here? You can see there's the pattern. And what's this? There's the H pattern. We've had it a few times in the Dow. Whoops, we've got a break. Okay,
yeah, Basil, stay right there, folks. We'll be right back with Basil Chapman after this break. Welcome back, everybody. This is Jacob Trooper Watch of the Tom O'Brien Show. We are joined right now by Basil Chapman. Basil, I know we had a short segment. Of course, we have some time after this one as well if you need to explain more, because we love having your analysis on. What are we taking a look at right now?
So what we're looking at is the Dow is down 161 at 41,840. So this bar here, which looked very ugly yesterday before that very sharp turnaround to close up 400 points, had the 9-period exponential moving average deflecting lower, and that went pink. So until that 9-period moving average goes green above the 14-period moving average, we've got to consider that this sell mode still is intact. Now, what's really important is that the Dow held the left side low. That H pattern, let me just show it again. Once it takes out the left side low, you've got to be very careful, because you have two bars. Doesn't matter whether it's a 1-minute bar or a monthly bar. You've got two bars in which to close above that, and that says if it does that and then starts to rally, the arch high is probably the limit that it can go. Okay. If it hasn't taken out that low, you can actually go quite a bit higher. So I just want to put that as a kind of a thesis out there. Now what we're looking at is within the context of the S&P. So we short the Dow, we also short the S&P. Look at this. It went below the 5504.65 low of the 13th. But look, it's closed twice now above that. So this is really important. I don't want to go through all of them. I can do that. For anyone interested in my show tomorrow at 10 o'clock Eastern Time, Tiger Technicians Hour, I'm going to go through this again, because we've got one day to go, and then we got the tariffs. But as far as the market is concerned, when you look at with everything that's gone on, I mean, just day after day, every newspaper around the country just about has had this thing about tariffs. And look, the monthly chart is still very strong, both in the Dow and the S&P. So I like to go one step at a time. The dailies are in sell modes. The weeklies have gone to a sell mode, but the monthlies haven't even gone to a sell signal. They're still looking strong. So it's price that is the dictator of trend. So if the S&P, regardless of whatever happens, let's just say at Friday's close, the S&P is below 54.80. That is very negative, because that's probably going to take out the trend line support in the weekly chart. If the S&P manages somehow, maybe it fluctuates and does things, but somehow Friday at 4 o'clock, it is over 57.04, and that's only 100. I say only because look how we're traveling. We're traveling in big moves the past few days. If it's above 57.07, or let's go to Monday. If Monday is trading, that kind of saves the day for a little while. But we've got to consider that yields were always the big thing in the market, and I can go to this chart real quickly. Did you say that we have another segment after this, or is this it?
Yes.
Oh, we do. Okay, let me just show you something. Then I'm going to take my time. I was busy rushing. I can take my time because I think this is on a purely technical basis. This is what we're looking at. This is the daily chart. I have a technique that I developed a long time ago. I treat the Dow and I use this as my dark news index. What does it mean? For a long time, the yields were always the topping, this double top, and I'll talk about earthquake and aftershock so that you get an internal high, and then the aftershock in this case here was a little bit less, so it was called the residual high, and then it plummets down. And it's the same thing at the bottom. You get internal lows and residual lows. So with that context, for the last, I'd say 6 months or so, it hasn't been yields because yields have just been staying steady at a highish level, but not breaking out. They're there. It's not a big deal. So tariffs. So we've got yields kind of off the radar at this point. Tariffs, it isn't a tariff, it is tariffs. It goes through orders, it goes through different sections. Totally. So I don't see any one-day resolution. It's going to be a process. So for me, the Dow, I call this the inside track propellant zone. In other words, every time the price gets in there, it bounces off. It went in there yesterday, and then it bounced off. If at any point in the next couple of days, first of all, if the Dow closes underneath this support line, that becomes resistance. So below 40,900, that's a problem. A close below 40,661, I believe it was. Yes, 40,661 in the next couple of days. That's not a good sign at all because now you've broken key support. So that's the Dow. So I call this, there's a dark news. It's not, in this case, it wasn't the bonds. It was this whole thing that is tariff related, but it's a little more complex. It isn't just one thing. It is tariffs. In other words, in all the different sectors. So as I see this is the first time that we've seen in a very long time where the bonds on a pullback in the market, it's not just a pullback, in a deep slide, have actually rallied. And I'll show you the TLT right now. Look, the TLT is bumping up against resistance, which means that yields are coming down. So that says to me, this is a little different to market declines before, because over the last few years, we've had bonds go down with the market. That's different to the 40-year bull market in bonds. So this says that's another thing here that's a little different because it's saying that money is going to the volatility index, that's the insurance, the VIX index, but money is also going into bonds. So that makes this the first time in a while that we've got something a little different. That's why I'm saying it's better for me to introduce to you the idea that we've got this arch formation. Look, even the transports, and to me this is very important. This goes back to Dow theory, where the transports and the Dow, when they make highs together, that's very bullish. When one of them starts to fail, well, then both of them are now sliding. So that says to me, don't treat this too lightly. This is quite serious because you've got the transportation, and the transportation today is very different to what it was in the 1920s because you've got the means with which you get shipping is so different, but it is the transports, and that includes the airlines. And if you've traveled recently on a plane, I mean, they are all full. So I don't know what's going on there because the airlines themselves are being really taking quite a dip. Yeah. So this is, to me, numbers to watch are I go back to the Dow. If the Dow is able by Friday or Monday to push into the 42.55, 42.730 area, I would say, phew, save the day. At least we can have a sideways to up market, and that means you can have a rally that could last, a couple of weeks. But I do anticipate that with this pattern, I'll go back to it one more time, and that is with this is the DNI, this is the dark news index, that there's a chance that we've had an internal low, we're going to have to make a residual low at some point. So I'm watching this very closely. So the parameters, it's not what's said, it's what the market does, and that's going to be very important. Now, what's very interesting is that you've got some support in areas like, and it talks about steel. Well, look at the SLX. Yes. This is the steel sector. Oops, did I do that? Yep, the steel sector. That should benefit because the whole idea is to get American, the huge products, the cyclicals, the deep cyclicals to rally. Well, it's struggling a little bit. So
know.
if the SLX, the steel sector, starts to move higher, it's at 61. If at any point in the next 2 weeks it actually starts to trade up in the 65 area, I think that would be very positive. If it breaks down and goes under 59, it says, one of the sectors that should have been a big beneficiary is not benefiting. So I think we have to look at this as one step at a time. And if we have another sector, I'll talk about gold as I see it at this particular point.
Basil, please stay right there, folks. We'll be right back with Basil Chapman after the break. Welcome back, everybody. We're joined right now by Basil Chapman, author of the Opening Call newsletter. Basil, before we went to the break, we're looking at gold.
Yes. So I'll just show this chart right now, just so that for those of people who are new to my work, I always try to identify the lowest low bar and then count each successively higher peak alphabetized sequentially to the upside, A, B, C, D, E, F, G. Uppercase on the way up, lowercase on the way down. But most importantly is that the objective is that when you get a buy signal that's upgraded to a buy mode, the implication is that it should go to at least 4 higher peaks, peak D. Peak D is where other things can happen. Where are we in the gold and the daily? We're in leg D. I use the 9-period moving average over the 14. Look how sharply higher it is. So this is very positive. The MACD is strong. The on balance, the relative strength, this little gray line here, is strong. It's at its high in the most recent time period. The on-balance volume has just started to dip a little bit down, but the green and this is the daily chart. The green and red lines are the stochastic, the slow stochastic, and that is at 92% right now. I love over 80, and I adore when it's over 90, but it's fantastic when it's over 90% and holding and flat. Well, it is flat at this particular point, so I'm looking at the on-balance volume, and that's suggesting that it's a little bit toppy, that it could pull back, but at this particular point, unless something dramatic happens, and we have to consider, well, I have always considered gold to be the insurance policy geopolitically, geoeconomically. In other words, for countries look at gold, they're not looking at, let me show you silver. They're not looking at, what did I do here? Let me just type it in. They're not looking at silver in the same way. Gold has this whole, silver's already made its peak D, it's pulling back a little bit. But what's really important is that gold is there's a fear factor involved in gold. And that's why I think it's done so well, regardless of everything else that's happening. So it's got D in the daily, leg D in the weekly chart, and a leg D in the monthly chart. So that just says, it doesn't mean that it's got Ds. You've got to be careful. That's where other things can happen. That's also where you can get an instant restart and you can keep going. So the whole thing is what happens next over the next 2-3 bars. If there is a lower high in gold, this is a continuous contract below 3,177 round number right there. If we pull back, that's okay. But at any point, if gold starts to break 3072, 3,000, let's call it 3,050, closes under 3,050 in the next week, that says now you've got yourself a little timeout in the daily chart. I have to tell you that weekly chart is still strong and that monthly chart is looking very good. And if you look at the XAU, and the XAU, I remember when it was at 42 or 44, something like that, way back in I think it was 1999, was making this beautiful, gold was making this beautiful bowl formation, not a cup, but a flat bowl. When a bowl breaks out, finally, it has this huge move to the upside. Well, anyway, here we are at 176, and it's made a peak E, and it's kind of digesting the gains. Of what I normally do in this particular pattern, I just put in a rectangle and I say, okay, you break to the upside, that's good. If you break to the downside, that's like a little mini dreaded H there, and if it comes down, you've got to watch the XAU, which is the Philadelphia Gold and Silver Sector Index, trading at 176.38, down 76 cents today. But in the weekly chart, I've only got this as a leg C, and it should try to go to a leg D. So that's positive for the gold and silver index, and it's a leg E in the monthly chart. So I thought I'd put it into perspective with other things. And if you look at the GDX has already made this peak D. It's got the same pattern as we were looking at the XAU, and it's got an alternate count in the weekly chart, but that just says it's done very well. But based on my work that I'm looking at here in the This is the GDX is the gold miners. Now, what's interesting is that the miners haven't participated at the same rate as gold because, as I said, gold is its own thing.
Yes.
And the gold miners are already being dragged up, I think, by gold. There are some gold stocks that have done absolutely fantastically, but not all of them. And certainly the silver ones have started to fail over the last couple of days. So this all says to me that gold is the predominant, the leader at this particular time.
Yes.
More as like the VIX index, like an insurance policy. So we need to watch it closely because if at any point, let's just say whatever happens with the tariffs on Thursday is the first real trading day, Friday comes along, let's just go all the way to Monday. If gold, I'll just jump back to that for a moment. If gold spirals at that point, it's not acting very well to the tariff declaration or whatever is going to be told to us. And it's going to be something to really monitor because if gold actually pushes much higher, I think that's going to put a lot of pressure on the general market. So the levels that I'm watching at are for gold breaking above 3,200 at this particular point in the continuous contract says, there's a lot more going on. And any pullback you get, if it spirals up like that, it means that you've raised your consolidation basis. In other words, at this point, I'm looking at gold, I'm saying 3,050. But if gold spikes to the 3,300 level, then all of a sudden you're looking at a high level of consolidation. So those are the parameters. I think that's the best we can do because we don't know what's going to be said on Friday. If you look at General Motors, it's supposed to really benefit. Well, General Motors, from the moment it was mentioned, has gone from 53 down to 45. It's trading at 47. Ford is supposed to benefit.
Yes.
And Ford is not looking all that great at this particular time. So I think it's going to be a process, how it's digested, how it's interpreted. And, that's the way I'm looking at it. And I think at this point, it's still telling us that the semiconductors are the clue. And the semis have been very poor. If the semis trading at 210 are able to break above the 200-period moving average of 235 in the next 4 or 5 days, that'll be great. That'll really be a big boost to the market. That's kind of what we need.
Yeah, definitely. And I mean, the fact that you're seeing gold, the spot price move like this, I mean, I think is an indication that, this information, I think one is even clear exactly, right, what impacts the tariffs will have. But until that, as you say, is digested, I mean, flights to safety in realms of uncertainty are going to be strong. At least that's my analysis on it, right? And I mean, gold, of course, has had a lot of energy to the upside. And you can always get kind of calm phases after that. But, until it's kind of clear what the implications of those tariffs are, I think, gold continues to seem kind of attractive, It has been the go-to place, in these conditions. And that it doesn't always happen like that. But the fact that it's happening now, and the dollar is actually taking whoops, I wrote it in there. The dollar is pulling back. It hasn't broken down yet. It's almost as, I like to think of all these things as independent of one another. So we've got to look at different levels, and that's what I say. So I gave you the levels for the Dow, I gave you the levels for the S&P, but we need the SMHs also to move the semiconductors. So we're going to see over the next few days. We've built up a cash position. I'd like to put it to work. Fantastic. Folks, check out the opening call newsletter if you want more stuff like this. Basil, thank you so much for joining us today.
Thank you very much, Jacob. Have a good evening.
Folks, there, we'll be right back.